Namaskar students, welcome to GDCA College channel. I am Dr. Ashok Jogdan. Today we will be checking part 2 of paper number 6, last year's question paper, that is of May 2025, paper number 6, cooperative banking and credit societies. So in this video we'll check remaining questions like question number 3 and question number 4. I'm going to show you paper actually, exam paper, question paper, how was the paper. So this was the paper actually. This is the English version and this is the Marathi version of the paper. So here you can find 4 questions in this paper. Paper was held on Sunday last year on 25th May 2025 at 2 p.m. to 5 p.m. for 100 marks, 3-hour paper. So I'll be giving you 3 hours time division as well in coming videos. So wait for that as well. So without wasting time, let's get started then.
ध्येय नवीन समोर दिसतंय बँकिंगचं स्वप्न पूर्ण होणार
GDCA ची साथ जिंकायची ही वाट यशाची गॅरंटी आता सुरुवात GDCA कॉलेज
हो भविष्य उज्ज्वल
GDCA कॉलेज
मिळणार यश
सहकार आणि बँकिंग करिअर घडवा खास GDCA कॉलेज देते यशाचा विश्वास.
GDCA paper number 6, last paper, part 2 for the previous year question paper and model answers, distinction level answers actually. So we saw in first video question number 1 and 2. In this video we will see question number 3 and question number 4. So the question number 3 was asked, that like answer in 150 words, any 3 each carries 10 marks, that is equal to 30 marks total. So first question was asked, functions of district central cooperative bank, that is DCCB. Introduction, what will be the introduction for particular question? You had to write the district central cooperative bank, that is DCCB, is the middle tier in the 3-tier cooperative credit structure. It acts as the link between state cooperative bank at the top and PACs at the village level. So main functions of DCCB: provides loans and advances to PACs and other affiliated to cooperative societies at the district level, accepts deposits from members, general public and cooperative societies, channels funds from state cooperative bank, that is Apex bank, to the PACs, provides a short-term, medium-term and long-term agricultural credit, maintains banking services including current accounts, saving accounts and fixed deposits, issues crop loans, Kisan credit cards, that is KCC, and other agricultural finances, supervises and guides the affiliated PACs in their day-to-day operations, provides non-agricultural credit for allied activities like dairy, fisheries, and poultry, act as clearinghouse for inter-society transactions, implements government-sponsored schemes for rural development. Conclusion for particular question: DCCBs plays a indispensable role in strengthening the cooperative credit structure and ensuring the flow of credit to the farmers at the grassroots levels. Number 2, advantages of internet banking. What are the advantages of internet banking? Introduction for particular question. Internet banking, also called online banking or e-banking or net banking, allows customers to conduct banking transactions through the internet using a computer or mobile device 24 hours a day, 7 days a week. Advantages of internet banking: 24/7 availability, Internet banking services available, around the clock, even on the holidays. No need to visit branch during the bank hours. Convenience, customers can access bank accounts from anywhere in the world using internet. Time saving, transaction completed instantly, no waiting in queues at the bank counters. Cost effective, online transactions are cheaper than traditional branch transaction, reduced service charges too. Fund transfer, NEFT, RTGS, IMPS transfers possible instantly at the time or at any time. Bill payment, electricity, telephone, insurance, premiums, and other bills paid online easily. Account management, view statements, check balance, download passbook at any time. Investment services, FD booking, mutual fund investments, insurance purchase available online as well. Environment friendly, paperless banking reduces paper use and promotes the green banking. Likewise, what we say nowadays, like if you want the statement of your account, you will get it on on your email in PDF form with the protected password protected PDFs actually nowadays. So you can see that as well. Conclusion, what will be the conclusion for particular question? Internet banking has revolutionized the banking sector by providing fast, convenient, and cost effective services to the customers globally. Number 3, question number 3, types of customers. Introduction, a customer is a person or entity that maintains a regular account or a relationship with a bank and conducts the banking transactions. Different types of customers have different legal characteristics. Types of customers, individual customers. Natural person who opens a personal account includes minors with guardian, adults, and elderly persons also included. Joint account holders, 2 or more individuals holding a common account operated as either or a survivor or both jointly. Partnership firms, business partnership firms open current account in firm's name. All or authorized partners can operate the account. Companies and corporations, register companies under Companies Act, account operated as per board resolutions. Hindu Undivided Family, HUF, managed by a karta, that is held separate legal status for tax purposes. Trusts and cooperative societies, registered trusts, clubs, associations, and cooperative societies. Government bodies, local bodies, municipal corporation, government departments. Illiterate customers can open account with a thumb impression. Special care needed by bank. Conclusion for particular question, bank must understand the legal nature of each type of customers to properly documents, service, and protect their interests. Number 4, function of a clearinghouse. Introduction, what will be the introduction for particular question? A clearinghouse is an institution or mechanism through which interbanking claims and counterclaims arising from negotiable instruments. Mainly checks are settled on a net basis. Functions of clearinghouses: collection and exchange of checks. Banks brings checks drawn on other bank and present them for payment. Net settlements are calculated. Time saving, instant of multiple bilateral exchanges. All transactions are settled at one place on a daily basis. reduces cash movement. Net settlement means actual cash fund movement is minimized, reducing risk. Error detection, reject checks, insufficient funds, signature mismatch are identified and returned promptly. Economical, reduces a transaction cost for all members banks by centralizing the settlement process. ECS, electronic clearing services. Modern clearing houses process electronic transactions like salary payments, pensions, and EMI. NASH, that is National Automated Clearing Houses. RBI is a centralized system for bulk and repetitive transactions. Prevent frauds, as like centralized verification helps detect fraudulent instruments. And what will be the conclusion for a particular question? The clearinghouse is a vital component of the payment system that ensures safe, fast, and efficient settlement of banking transactions. Question number 4. What was the question number 4 in last year exam? Answer in 500 words. Any two each carries 15 marks. That is of total question 30 marks questions actually. Question number 1. Various functions of RBI, that is Reserve Bank of India. Introduction for particular question. What will be the introduction in answer? The Reserve Bank of India (RBI) was established on 1st April 1935 under the Reserve Bank of India Act 1934. It was nationalized on 1st January 1949. RBI is the central bank and supreme monetary authority of India. It is also known as the bankers' bank and lenders of last resort. Functions of RBI. Number 1 or A, you can say what I have done is here I have mentioned A, and because I have to write point in 1, 2, 3 format. A, traditional or primary functions. Number 1, currency issue functions, that is RBI has the exclusive right to issue currency notes in India except 1 rupee note and coins which are used by the government of India. RBI controls the supply of currency in the economy. Number 2, banker to government. RBI acts as a banker, agent, and financial advisor to both central and state governments. It manages government accounts, collects revenues, makes payments, and manages public debts. Number 3, bankers bank. RBI act as banker to all commercial banks and cooperative banks. Banks keep their cash reserves with RBI. RBI provides loans to banks in need of funds, lenders of last resort. Number 4, collector of credit. RBI controls credit in the economy through a quantitative method. Bank rate, CRR, SLR, open market operations, repo rate, reserve repo rate, and qualitative methods like margin requirements, credit rationing, selective credit controls. Number 5, exchange control. RBI manages India's foreign exchange reserves and controls the foreign exchange transaction under FEMA, that is Foreign Exchange Management Act. B, promotional or developmental functions. Agricultural finance. RBI promotes the agricultural credit through NABARD and other institutions. It allocates credit to a priority sector including agriculture. 7, industrial finance promotes credit to small and medium industries as MSMEs through a priority sector lending norms. Next, Export finance, provide a refinance for the export credit to promote India's exports. Training, runs the training institutions like Bankers Training College, that is BTC, College of Agricultural Banking, that is CAB, to train banking staff. Supervisory functions, regulations of banks, issues the license, frames rules, conducts the inspections, and takes action against non-compliant banks. Credit rating supervision, monitors credit rating agencies and financial institutions. Foreign exchange management supervises the authorized forex dealers. D, other important functions. What are the other important functions of RBI? Clearinghouses, operates a central clearinghouse for interbank settlements. Data publication, publishes the important economic data and statistics on banking and finance. Repayment system, manages and promotes the digital payment infrastructure, that is RTGS, NEFT, UPI, ecosystem regulations. Conclusion for particular question. So what will be the conclusion? The Reserve Bank of India performs the multifaceted functions as the apex monetary authority. Its role is not only a regulatory and a supervisory but also developmental. RBI is the backbone of India's financial system, ensuring monetary stability, economic growth, and financial inclusion. Without RBI's efficient functioning, India's banking system and economy would be severely impacted. Number 2, objects and functions of State Cooperative Bank. Introduction. What will be the introduction and answer? The State Cooperative Bank, that is SCB, also known as the Apex Bank, is the topmost tier in the 3-tier short-term cooperative credit structure in each state. It acts as the custodian of a cooperative movement in the state. SCBs are registered under respective state cooperative societies act and are also regulated by RBI. Objectives of state cooperative banks: to act as the apex financing institution for district central cooperative banks, that is DCCBs in the state, to channel funds from the national financial systems, that is RBI and NABARD, to the district and village level cooperative institutions, to promote and develop the cooperative movement in the state, to provide short-term, medium-term, and long-term credit to the affiliated DCCBs, to supervise and guide DCCBs in their financial management and credit operations, to mobilize resources from various sources and deploy them productively in the agricultural and the rural developments. Functions of state cooperative banks. What are the functions? A, banking functions. Accepts deposits from government bodies, DCCBs, cooperative societies, and the public. Provide refinance to the DCCBs for onward lending to PACs and the farmers. Maintains accounts of DCCBs and facilitates fund transfers. Issue Kisan Credit Card, that is KCC, and agricultural loans indirectly through DCCB. Supervisory functions: supervises and audits affiliated DCCBs regularly. Reviews the financial health and loan recovery of DCCBs. Takes corrective measures for DCCBs facing financial difficulties. C, developmental functions: trains staff of DCCBs and PACs in banking operations. Provides guidance for the modernization of cooperative banking operations. Implements government and NABARD sponsored schemes. Promotes cooperative education and awareness among the members. D, financial management functions: maintains statutory liquidity ratio, that is SLR, and cash reserve ratio, that is CRR, as per RBI norms, manages investments and treasury operations, prepares annual credit plans for agricultural and rural lending. Conclusion: what will be the conclusion for particular question? The state cooperative bank is the most important link between the national financial system and the village cooperative credit institution. It plays a vital role in mobilizing resources, distributing credit, and developing the cooperative movement. A strong SCB ensures a smooth flow of agricultural credit to farmers, contributing significantly to rural prosperity and national food security. Number three, what was the question number three? Institutional and non-institutional sources of the agricultural credit. What will be the introduction for particular question? In answer, we can say agriculture is the backbone of the Indian economy. Farmers need credit at various stages for buying seeds, fertilizers, irrigations, machinery, and for meeting crop expenses. Agricultural credit is the broadly divided into institutional and non-institutional sources. Institutional sources of agricultural credit. Institutional sources are organized and formal sources of credit regulated by government or RBI. Number one, cooperative credit institutions. These are the most important institutional source for agricultural credit in India. PACS, that is Primary Agricultural Credit Society, provides the short-term crop loans at village level. DCCBs, District Central Cooperative Banks, provides credit to the PACS and cooperative societies. State Cooperative Banks, Apex Bank providing a refinance to the DCCBs. Land Development Bank, that are LDB, provides long-term loans for land improvement, irrigation, purchase of machinery. Number two, commercial banks. After nationalization in 1969, commercial banks actively provide agricultural credit under priority sector lending. Provide Kisan Credit Card, that is KCC, crop loans and term loans. Operate through rural branches and businesses correspondent. Number three, Regional Rural Bank, RRBs. Established in 1975 to provide banking and credit services to rural areas, especially to small and marginal farmers. Number four, NABARD, that is National Bank for Agricultural and Rural Development. Apex, the institution providing a refinance to all rural financial institutions, also provides direct loans for rural infrastructure. Number five, microfinance institutions, MFIs and SHGs. Self-help group linked to bank SHGs bank linkage program provides small loans to rural poor, especially women. B, non-institutional sources of agricultural credit. These are informal, unauthorized sources of credit that exist long before the formal banking structure. Number one, money lenders, the traditional source of rural credit. They provide immediate loan but at very high rate of interest, that is of 24% to 60% per annum. They exploit farmers and cause the rural indebtedness. Landlords and zamindars provide credit in a kind of the cash to the tenant farmers against the future crop share of often exploitative. Three, traders and commission agents, that is RTS. Advance credit to farmers against the promise of selling their produce through them, high interest rate and unfavorable conditions or terms. Number four, relative and friends provide interest-free or low-interest loans for short-term period, informal and limited. Number 5, tit funds and indigenous bankers, traditional finance mechanisms, no regulatory oversight on variable terms. So, institutional sources and non-institutional sources. So, if this question comes in difference between, you got to write in this manner actually. So, regulated by RBI's government, unregulated or informal. Low interest rate, very high interest rate, documentation required, no formal documentation required, legally protected, no legal protection, tax, DCCBs, banks, NABARD, money lenders, landlords, and traders. Conclusions. What will be the conclusion for a particular question? While institutional sources of agricultural credit have grown significantly since independence and nationalization, non-institutional sources still play a vital role in areas where banks have not penetrated. The government of India and the RBI are actively working to replace exploitative non-institutional sources with regulated, affordable institutional credit through schemes like Jan Dhan Yojana, KCC, and SHG Bank Linkage Program. The ultimate goal is to ensure that every farmer has access to timely, adequate, and affordable credits. So this was the paper number 6, last paper, which was held on 25th of May 2025 last year. This was all about part 2 of paper number 6, that is of cooperative banking and credit societies. So we saw last year paper, so question number 3 and 4 in this video. So we shared on this channel. Actually, you can follow this channel. Also, we'll be trying to give you some other examinations as well, like competitive examinations like banking sectors and other sector examinations too, so that you can get to know like how can you do that as well. So other things, whatever suggestions you have, please do ask us, and we'll give you a call as well, or else you can call us too. We'll see you in next video with more updated information in different topic. So till then, namaskar.